reports are to be believed, Reliance Industries is possibly on a shopping spree. Of course, we all know that the next big project for Reliance Industries is its retail business. It also ties in with the Jio platform and Jio Mart. So here are what the reports are saying, that Reliance is currently looking at sweeping up a slew of tech-led companies or startups, if you want to call them, ranging from Urban Ladder, which makes and sells furniture, NetMeds, which is an online pharmacy, BigBasket, which is an online delivery system for milk, Zivame, which deals in women's clothes and underwear. There are even reports that Reliance Industries may be looking at buying TikTok. So what is the strategy or the thinking behind this shopping spree? Does it make sense? Is it a ploy or a strategy to consolidate, or is it to pretty much wipe out the competition before the big launch? What does it also mean for the online shopping space, which is growing rapidly in India, but let's face it, as a proportion of the overall pie, it's still pretty small despite the shot in the arm it's received from the coronavirus pandemic. So to speak on this and more, I'm joined today by Sushil, Choksey, Director of Indus Equity Advisors, as well as K Ganesh, Serial Entrepreneur, and someone who knows this game, the retail space, especially the online retail space, very well. So welcome to both of you, and thank you for joining us today. K Ganesh, let me begin with your take, and let's look a little more closely at some of the names doing the rounds that are apparently on Reliance Industries' radar. Do you see a plan in all of this? Is there a sense of where this is heading?
Yeah, absolutely. I think Reliance is just tanked up on huge amount of capital infusion, and it has got hundreds of millions of customer access to them through the Jio platform already. So it absolutely makes sense for them to find additional ways of making themselves relevant and useful to the consumer, and from their point of view, trying to monetize the hundreds and millions of consumers that they already have on the platform and they continue to acquire. The only thing that could have spoiled the party is the fact that it is a long-term game. They would need a lot of capital. It will mean a lot of burn, but that has been addressed by the stupendous fundraise that they have just closed on. Also, you must understand, last 10 years we have seen that the horizontal, whether it is Amazon, whether it is Flipkart, whether it is BigBasket, whether it is Paytm, the horizontal e-commerce companies have come of age and ruled. Now it is the potential for niche, domain-specific, vertical e-commerce place. What do you mean by that? Furniture, jewelry, deep fashion, and to some extent even grocery too, lingerie. All of them are vertical niche e-commerce place that is completely open, and that is in. So this is a perfect combination for serving the consumer and for value building for Reliance to be able to do this. I would do the same. So it's quite logical and obvious for them to be able to do it.
Sushil, Choksey, do you agree? Is it really obvious and logical to sort of sweep up all of the relatively tiny and smaller players in the market? Because in a lot of these spaces, Reliance is already existent on the online platform. They sell a lot of these things through their various platforms and brands. Do they really need these niche players?
Good evening, and thanks for inviting me on the show. You know, looking at the current scenario post-lockdown and the current conditions with COVID, what's happening globally, you need to keep an eye on. And looking at what Amazon is able to achieve, or Walmart has achieved, or the Chinese majors have achieved. Who has the equity power? Who has the muscle of growth? And who will be able to sustain the technological change and the competition which is going to emerge from these big giants? So keeping all perspective in mind, all the new startups and companies which have emerged with new ideas, be it in education, medicine distribution, online education is concerned, telemedicine is concerned, fashion retailing is concerned. So all the plays which you might highlight or the press may speculate that Reliance is looking at, one side is how do we consolidate to grow from a $25 billion current sales to $50 billion sales in 2 to 3 years? How does organized retail, which is 10 to 12% of India's market at 90 billion as per Reliance annual report, which is estimated in 5 years to be 140, $130 billion. So will this market have a larger pie from the organized side? I see it's happening because Reliance is making an enabler between the Facebook investment into the platform along with WhatsApp being rolled out for GeoMart. At the same time, all this aggregation of new entities, once they're able to acquire from music to medicine, food to all the other personal, that is fashion retailing and every aggregation, basically all these businesses need large capital. And today the private equity, which Chinese funds were a large investor, SoftBank was a large investor, maybe South African funds were large investor, and as per the Western money, people are attracted to this space, and Reliance has demonstrated the capability. So if Reliance is able to give money, they may acquire fully some companies, somewhere they may emerge as a partner, and the pie, which is at $25 billion sales currently in Reliance and rupee value at 1,60,000 crores. The ambition is to be 3 lakh crore plus. So whether they acquire one of the larger rival retail, which is straddled with debt, or they acquire the small players with 50 crores to 200 crore kind of sales, and they are looking for a fresh round of infusion, it's a matter of time. I see 2020 as a consolidation phase where e-commerce is concerned, because private equity capital, one side we put a restriction from certain countries. At the same time, domestic private equity is availability pool is a limited one. The third is bankers don't support this startup. There's no equity money. I mean, there's no funding as a working capital because they want hard assets to lend to them. And public sector being 65 to 70% of banking, your retail receivables, distribution capabilities, stocking, everything, and technology which is not visible, you are not going to get funding from banks. You may get a startup might have been defined as priority sector by RBI, but that's for a category of 5 to 25 crore. You are not going to get 500 crore if you come up with some kind of a new venture and take on any of these. So the mightier, the big companies, so Amazon, Flipkart, Reliance would emerge as a big buyers in most of these companies. And I am happy at one time that Indian entrepreneurs were emerging and going to get a lot of
seems
money
like
and their cash out.
counterintuitive. Sushil, if I can come in, Sushil, if I can come in, this seems contradictory in part. So a comment that K Ganesh made a little while earlier, and it was an interesting one, that now in the online space or the online retail space, we are at the point where it's moving towards niche players instead of your hold all kind of players, which is why some of these names that we've spoken about have really flourished, because they are sites or they are apps which are focusing on one particular vertical. Now you're talking about a giant coming and sweeping them all up. Will they not lose their uniqueness?
Tamanna, the point here is simple. I have a slightly different point of view than what Sushil mentioned. It is not about lack of capital, either because of the challenge with Chinese investors or the lack of Indian private equity or banking system. One of my pet peeves, I've been in the greenfield startup entrepreneurial ecosystem since 1990, almost 30 years. One of the biggest challenges in the startup and VC private equity early stage ecosystem is lack of exits, because Indian companies have been large conglomerates, despite having thousands of crores of cash, have shied away from M&A acquisition unless it is EPS accretive or profit making and all of that stuff, unlike in the US. So what has happened is, because of that, Indian startup ecosystem is been deprived of exits. You can literally count successful exit in your fingertips. Okay, right? I'm not talking about paper valuation. I'm talking about actual exits. So what the Reliance size, scale, capital has given is actually a positive opportunity, not a negative one. positive opportunity for entrepreneurs to do startups, for companies like Reliance, which has got huge distribution, huge muscle, huge financial capital, ability to raise more money. During COVID times, they raised so much of money. It has given an opportunity for them that they can come in and actually acquire startups, give exit to investors, give monetization to founders. All of these are majority or full 100% transaction. Reliance is not acting as an investor here for putting minority investment. So they want to control, they want to do this, they want to plug into that geo platform and do that. So I think that is extremely positive. Yes, they will lose to some extent the identity independently that they had. But one of the challenges of niche e-commerce always is how do you get those hose pipe of hundreds of millions consumers coming to you? It will be very difficult for individually each one of them to acquire the customer because the equation of simple customer acquisition cost, the jargon we use is CAC versus the long lifetime value LTV, does not work that well for niche players. Whereas here already in the platform, you have hundreds of millions users. So it's a win-win. Of course, some of the founders will continue, some of them will leave and will move on to other things. But it's extremely good for the ecosystems to keep the pipeline, the plumbing actually active and do that. Yes, individual identity will get lost. It will get merged into this. But look at it from a Reliance point of view. 0 to 1 is always very difficult and very different than going from 1 to 100. Corporates are good at doing 1 to 100. 0 to 1 has to be done by entrepreneurs taking risk, growth hacking, whatever you may call it.
But are they zero? Are they zero? There's already quite a significant presence. Ganesh, are they zero? Are they zero today? That's
no, they are one. They
already have a significant presence online.
No, not significant, Tamanna. They are one. Yeah. No, I wouldn't call them significant presence. They have presence. They have cracked it. They have gone from 0 to 1. It's like a seed becoming a sapling. They are sapling. They are not yet trees that are part of an orchard that for the next 25 years will give a lot of fruits. Now, for a plant to become a tree, to maintain an orchard for 25 years, Reliance is better suited. To go from a seed to a sapling, an entrepreneur is better suited. So okay. we need to distinguish between the two, and I think it is a great win. One cannot replace the other, and I can show you enough examples. ICICI acquired my BPO startup customer asset, what is called First Source now. It was a win-win for both.
Tamanna, if I come in here.
Sushil, I want to understand from you what you think the big picture is. Yes, I'm coming to you, Sushil, and I also want to ask you, besides your response that you want to give, what the big picture looks like. Does this look like Reliance pitching its retail plans more on the online side? There seems to be a very keen focus on the online side. So are they betting on a huge expansion of online retail, which, like I mentioned earlier, has grown exponentially in India, but is still a relatively smaller part of the pie?
If you had been in 2019 and if you had asked this question, many people would have not agreed on the strategy. What is emerged today? Post-COVID, most of the strategies of most of the entrepreneurs have changed. What's changed is the scenario led by an event which is perpetual in people's mind, and the habits, whether to shop in every aspect, whether you want to order groceries, medicine, or you're ordering any personal needs at home or any fashion accessories. People sitting at home are spending more time. They have more understanding and access to multiple products rather than a single choice walking into a store. So it's no more a personal experience of going into a mall and seeing 10 shops. It is now people are going by what's reality, which is led by COVID. And the Reliance strategy post raising such large equity, because people had questions, how will they sustain when Geo and retail both were absorbing so much of cash. Reliance has demonstrated that they are able to raise $20 billion on Geo platform. And it is possible that within a year post some of these acquisitions and what is aggregation of some consolidation between domestic industry, which Reliance Retail is likely to work out, and the partnership with Facebook where WhatsApp and JioMart is concerned, Reliance would demonstrate that they would have another 10, $20 billion of money in the equity where retail is concerned. They can create a large platform. Reliance needs a lot of unique support and speciality. And speciality needs time and talent. Time and talent is where Reliance is looking to invest, and time and talent will give them the top line. And so the three T's in my terminology is what Reliance is targeting. So their ambition of 25 billion going to 50 billion, maybe 100 billion in 10 years, one doesn't know today. But it is very sure because he himself, Mr. Mukesh Ambani, has spoken about in the AGM and various platforms whenever he's spoken that organized retail, which is at 10, 11%, growing at 8, 9% in every aspect, every product segment, would become a 25 to a $30 billion uh, percentage wise in sales and organized retail. And if organized retail, which is a 90, is growing at this current rate, by 2026 and 30, where we would be and what would be the maths of organized retailers between Reliance and some other competitors is the time to see. There's so many speculation about Reliance and Amazon coming together because of Future Group. We don't know what's going to what way the deals are going to get structured, who are allowed in what space, what laws change. Reliance is a domestic company; they will be enabler. And as education, pharmacy, grocery, fashion, all this is a large market where Indian population is concerned. Aspiration and demands are growing. Price points are getting better. So people are accessing more, and technology has become an enabler where this product offerings are concerned. So Reliance ambition is going to match what their thoughts are, and top line would demonstrate that they would attract the best from the world. I'm happy for some entrepreneurs who are going to get support. Some ambitions will not be achieved because they don't have the equity support. India, if was offering equity support, what Amazon could create between late 90s to 2015, they had only top line. They didn't have profit. The profits have started coming in last 5 years, and partly because of cloud business, not at all retail. So we need to understand that. Why did Walmart come and buy Flipkart in India? It's not an easy deal. They came to India to buy, but they were not present in most of the other markets and they were not successful. So I'm not a specialist in it, but my understanding is very clear on that subject.
Okay, it's going to be a very interesting space. Remember, we're still waiting for official details to emerge and see how all of this unfolds. What is finally picked up, what is finally not, and what the entire picture is. I think one thing that we can say with relative confidence is that there is a huge retail plan out there for Reliance Industries, and it will include either getting a lot of the competition, specialized players into the fold, or really leaving no space for them. So we will have to watch out how this consolidation drive plays out. I want to thank both of you, K Ganesh and Sushil Choksey, for joining us on the show this evening.
Thank you.
Thank you.